I'm audible, right? So I'm using actually a new Bluetooth headset, so I'm not
Yeah,
sure.
man, gets
Yes,
better
you're audible.
actually, more clearer than normal.
Yeah.
Correct. Sure. So I'll start when you say.
Yeah, go ahead.
All right. So very good evening, everyone. So today I'll be presenting my findings on P analytics. Uh, so P analytics, if you go by the name, it stands for prop equity, and the tagline is creating investor intelligence. So we'll see exactly how they do that. So prop equity it deals in a very niche space. It's an analytic company. It deals in real estate only. It's a very niche space, and if we see their vision, you'll get the idea of what they actually offer or what they do. So their vision is to create an information service enterprise through continuous innovation and integration of real-time data, analytics, and cutting-edge technology to achieve higher transparency for all participants and beneficiary of the realty sector. So they involve data, real-time data analytics. All these are very real problems which P Analytics is trying to solve for the realty sector, for the real estate sector. So it's under the ticker in the small medium emerge index of NSE under the ticker of prop equity, and its market cap. I'll update this is close to 150 CR, which is one of the smaller companies we have analyzed here as a team. And P in my calculation stands at close to 15. So, moving forward, we'll try to see what is the problem statement? Why do you need a company like P in the very first place? Uh, so there's a very apparently very insufficient data transparency and accessibility in real estate sector. So yesterday I visited my local salon and I stayed there for a good 30 minutes. So I think everyone in that room was closer in their mid 30s or in 40s, and everyone talked about real estate only. They bought a plot at X lakhs, they sold it at that. They were pitching each other different real estate opportunities, and everything was anecdotal in nature, and nothing was backed by data. Nothing. You just hear, ki, okay, someone bought a plot at 10 lakhs, he sold it at 40, and nothing is. It's everything. It's anecdotal in nature. But for institutional investors, for people who professionally invest all those money or take decisions, that kind of investing is not applicable. They need data. They need, which is apparently a very big problem in the real estate sector. So McKinsey in 2018 wrote this article in which they tried to connect the use of analytics, how you can leverage analytics in the real estate sector and get better decision making, have better decision making. So they mentioned about how if you use traditional, you need a large database in the very first place of traditional and non-traditional data, and if you'll implement that, if you'll forecast or use basic analytics to uh, project in the future, you'll get a very predictable rents with an accuracy of 90% in their ML models. So, uh, and they mentioned about how traditional variables, for instance, vacancy rate, all these things would actually correlate with future values. They aid in the decision making. So, for example, when we also in finance also try to make sense, we need access to financial data. We need access to all various data points in order to set expectation, in order to make some sort of sense of these numbers. The article pivoted to using non-traditional features, but the very problem exists that we do not have even traditional data points well accounted, well database accounted on a month-on-month basis. That is a very genuine problem. There's no government authority or anything which does it very transparently, very actively. So you would need a lot of factors such as what the rentals has been, what the kind of property rates have been, vacancy rates, for example, absorption rate, how much, how exactly are the properties been doing. Uh, Real estate sector, we see how majority of the projects get stalled, are not completed. So all these data points, you need a very uh, good accounted for data to make actually sense of these numbers. So there comes P. P has its data-driven services for the real estate sector. They come in and try to fix this gap. And majorly, they have three verticals, which will go through of what they actually offer for the investor, for their clientele. Uh, so first is their real estate business intelligence platform subscription. So this is what their core product has been for many years, which is basically whatever problem statement I mentioned, they try to solve that. They have to close to now 300 people team. They account for data on a 14 year. They have month-on-month data for 14 years data. Uh, they account these for across 100 plus data points, and everything is uh, 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 very well presented on this platform. So this would be a subscription-based model in which if you are, you can actually contribute a website, approach their team, and you'll have access to that. So it currently contributes to 60% of the top line, and it showed a YOY growth of 21%. This is according to um the 9-month data of FY23. One thing which I forgot to mention about PE is that this is a very small company. So a lot of questions I wouldn't also have answers to, because you can't expect for a company of PE size to have a very elaborate, very well managed investor relation department. They do not do con calls. They do not uh, I just have access to half yearly presentations, and there's a lot of information deficit. But we'll try to get the bigger picture correct, and the trickle down effects of this real estate industry. They stand to gain a lot of them. So okay, this is the core product, which is a platform. We'll go through its dashboard. Even we have access to the screenshot of it. We'll try to see that as well. Now, the other service which they offer is a research and consulting services. So they'll provide you with customized research, whatever your particular demand is, whatever your particular you're looking for. They'll look for feasibility studies if even it is feasible for a project to for anyone to continue with their project. They'll see for demand assessment that, and all these are financial modeling, project benchmarking. These are very real problems. When with backed by data, you would be able to get a much better understanding that if I should go forward with this project as well. And we'll see what kind of service deal is available for which client. And lastly, this is collateral risk management. We start CRM. So this is a retail valuation service. This is a newer vertical which they launched, and they account for mostly its valuation services. So if we see we have covered the NBFC sector, so housing finance companies of housing companies, financing companies in general. You need to get a sense of uh, the project, the thing which you are loaning, you are extending the advances for. So if you're able to get you can have it in house, which is an added operating expense, and even a big one you might not be good at, or you can just outsource to companies like P, which their core competency is doing this. They have been doing this for tens of years. So CRM is a vertical which has been doing very well. So currently, it is contributing to close to the remaining 40% of the business, and it has shown a 48% Y-on-Y basis, and it is currently the growth driver for this business. So the subscription business is growing very stably, and the CRM was something which they launched recently in 2021 also, and it has been doing phenomenally well, even though it now has started contributing to a decent 40%. So if I were to quote Mr. Chinmaya, so he's a very active member in the value picker community as well, and he has also written a very beautiful thread on a thread on P. So he mentioned about how all these services are not the biggest asset or biggest mode of P, but it's the data points, it's the database which they have been collecting for years, uh, which they actively maintain. They invest 6 crores approximately every year to just uh, 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 make the database better, make have a sensor. So according to Mr. Chinmay, he mentioned about how the data which they collect is the biggest asset, and CRM is a very good example how they leverage that data to start a new vertical. And it's already been contributing to close to 40%. It's growing at a very reasonable rate.
So, Mike,
Moving forward to yeah.
Mike, before you move on, yeah, on this slide, so the CRM offering, you said it goes to NBFCs. So, what kind of NBFCs would buy this data?
Yeah, sure. So I have a slide on this. So
Okay.
I'll mention what exactly each clientele is. I do not have exactly that what clients do they have. They have a slide. They had mentioned a DRHP. So
Okay.
uh, I can't
Okay.
exactly say which exactly are their clientele, but they have their logo.
No,
So
I mean,
every
as long
major
as, yeah, we know the
yeah.
segment of NBFCs who are, exact
Hmm.
names are not needed, but like, is it housing finance companies or is it real estate financing companies, right? Companies who finance the real estate companies or companies who are financing the citizen who's buying a flat there, you know? So,
Yes, so I think they were both were accounted for. So you would have real estate companies as well, which would approach for these services. And for
Mhm.
CRM, you have, of course, I think the major clientele would be these companies which have to assess the very project on an individual basis or for the exactly retail service. Yeah.
Okay. All right.
I had a question.
Also, mhm.
Yeah, yeah, please, please, Bank. You
No, no, no. Yeah, sorry.
complete it. Okay, so my question is, what sort of real estate do they cater to? I mean, is it like domestic, or I mean, residential, commercial, everything, right? Also industrial.
Yeah.
Okay.
Yes. So I listened to Mr. Sameer's one interview. So he mentioned about how exactly land can be bifurcated to two parts. One is the agricultural land, and one would be the commercial or residential sort of non-agricultural land, basically. So he mentioned that agricultural land is something which is very tough for. It's not even the use of the client. It's clientele. So that is not something which they venture into.
Hmm.
Major everything would be related to the retail, commercial, residential. So for example, this platform also has two verticals. One would be for the commercial thing, and one would be for the retail some sort of thing. So sorry, residential and commercial. So one would be for your like projects, and other would be, let's say, they have elaborated on leases. Let's say you have malls, you have different sort of things. So they have that sort of data. So that would be the non-agricultural. Yeah.
And they would also operate in then tier one, tier two cities, max. I mean, they won't go to tier three also.
Correct, sir. So I'll
Sorry.
share that as well. So currently they have a network of close to 45 cities, in which I believe 14, 15 are tier one, which actually account for the majority of the real estate in general in terms of volume, in terms of value. And the
Okay.
other are tier two cities, which are close to 30, I believe. I'll share that as well.
So I'm just trying to place this company in the entire value chain. So for example, if I am, say, a hospital owner, right, and I want to
Mm,
kind of expand my hospital and try to find, say, for example, I want to find a hospital in a radius of, say, 5 kilometers or 7 kilometer from my current hospital, and also there's a direction to that. Say, for example, in the northern side, probably then this company would be the best company where I would reach out to them, and they'll sort of become like this broker, but then they'll give us more and more, I mean, end-to-end sort of a situation. I mean, I'm trying to kind of put it,
mhm.
or try to see it as a broker firm. I mean, real estate broker firm only. Is it correct? Is that analogy correct?
Uh, so I'll beg to differ on this. So Mr. Sameer mentioned in one of his interviews that the very idea was why SPA different, why PE is not as, I mean, you visit websites like 99 Acres. There are already very existing companies which cater to let's say they will provide you some sort of not as comprehensive as PE, but this will provide some sort of a technical angle to the real estate sector. They're
Hmm.
already existing companies. So he mentioned about how those companies have pivoted to just being brokers at the end of the day. I mean, the
Hmm.
whole idea which they wanted to digitalize the real estate sector, that hasn't happened, and they just turned into brokers, as you mentioned.
Hmm.
But pay would be, I believe, something which uh, you would need, as I mentioned, these services which you can't actually you don't have access to. You can't even build them in house, so you would need to. Uh,
I mean, I mean,
uh,
who would use the real-time, say, market prices? I mean, who would need it? I'm trying to understand who could be the customer. I mean, say, for example, I'm a
Yes, so
builder.
I'll
Hmm.
have the slide in which I'll just explain key what
Okay,
exactly
okay, okay.
which
Cool.
yeah
ठीक
yeah.
है. We'll, yeah.
Any other question? Yeah.
No, not so much.
No, Mike,
Yeah,
you can proceed.
yeah, I'll continue. So let's look at for industry outlook. So P, as I mentioned, is a very small company. It's just 150 CR. So if you're bullish on the whole India story, you have to be bullish on the realty sector as well. So the if the realty sector is moving towards organized players and they are doing well, so those trickle down effects eventually will happen. Will come to P and it will grow. That is the major idea, which should be while investing in a company like P. So if you just look at the latest results, what have been. So according to Motilal Oswal and its latest real estate sector update. So in FY20 Q4 FY23, the financial year ended, it was actually the best quarter for these listed companies. They delivered good growth. They delivered good pre-sales as well. Um, Bookings were better. The inventory has the churn rate has increased, and in general, it's very counterintuitive for a sector like real estate to do well, because as we are aware that interest rate cycle, interest rates are very high, so it actually disinterest does not incentivize you to actually go out and buy or uh, uh, get houses or have some capital deployed. But surprisingly, these companies are doing very well. And on the future outlook, so as interest rate cycle topples out, as it bottoms out, then it will be much more lucrative. It will be much more. It should have much more demand, and this is according to Motilal Oswal. They don't see any headwinds. They expect actually a healthy, unless a sort of anomaly happens. The outlook is good on this sector. So RBI publishes this home price index. So price, this would be just an index which is much like GDP is benchmarked across some base, and uh, you just see if prices are increasing, and they have been increasing the latest figures. So prices are doing well, the sector is doing well. And according to Anurag, this is again a very similar news. So the transaction for the fresh sales for housing markets are also doing well. So in general, I want to set the image that the sector is doing well. Also the trickle down effect will eventually come to it. Uh, Moving forward, as I mentioned, PE deals in the analytics market. So these all are relatively, I would say, thoda stretched out. These are all part of its DRHP. Won't go into much detail, but the whole idea is that the analytics market is already strong and it's growing at a good rate. And a very small pie, a very small slice of this pie for PE, if they're able to capture, they will golden, they'll be very well. So I'll move forward. You can read this at your leisure. This is a part of their prospectus as well. So we'll start with actually understanding the company in now. So we have the bigger image in mind to what actually PE does, what it's trying to do. Now we'll dive deep into its nitty-gritties and see. All right. Talking about its timeline going down to the memory lane. So it was incorporated in 2007, 2009 by Mr. Samir Jasuja. So he's the man behind it also. Mr. Samir is a very vocal. He's a poster boy. He's very prominent. If you'll just Google or if you just go on YouTube, just type his name, you'll find several interviews. He has been a very prominent and very a veteran of this field, a very vocal person as well. So the whole idea was that foreign investor P actually wanted to enter, and without data analytics, without some sort of data at their disposal, it's very tough to make decisions, very tough to make sense of this. And this created an opportunity for Mr. Sami to start Prop Equity at that time. So they ended up signing their marquee clients. Uh, so basically, a PE firm actually had a stake in this. Overall, and then they moved on to data collection. So currently, they have data collection was strengthened, made stronger ground presence. Yeah, as I mentioned, they have access currently to 45 cities and close to their 200 employees at the time of IPO. 50 were just market research. They would be people who will do the hard work to actually go and visit and collect the data points, collect rich quantifiable data. In 21, Prop Equity also publishes annual reports, some sort of reports on the housing index. You can access it via their website, and they even have the collaboration with housing and RBI. So as I mentioned, the property show launched by NDT Profit. It was co-anchored by Samir Jasuja. As I mentioned, he's a very vocal, very prominent person in the media as well for this space. And if I take the considered B2C product, this is exactly what I was talking about. So B2B would be something which, as I mentioned, the first product, which is the platform. Usually, big clientele, big investment firms, those would be the target audience for that product. B2C is related to the retail valuation or the valuation, the CRM vertical, which has been doing pretty well, and they were the first or some sort of. Um, this is an existing field, but they actually ventured it very aggressively, and that shows in their books as well. Um, Although, yeah, we'll go into the financials as well. This is a very lucrative business. A company like PE, which is an analytics firm, they are very lean in how they operate, and that is reflected in their margins, their PAT margins, their EBITDA margins, which we'll go into detail. Um, Overall, and they listed in 2021, 2022. We'll go through their IPO stats as well. So, as I mentioned, they IPO'd in 2022. So it was the uh, year of IPO. Every other day, some big IPO was happening. It was a good time to get listed. So the IPO start was it was a fresh issue of 14.52 lakh shares and offer for sale, which Mr. Sami is reducing stake, and the issue size was 31.6 years. Uh, the purpose which they mentioned was, of course, the technological upgradation, which is their core idea, and this retail initiative, which I mentioned, B2C expansion plan, which is the vertical which I was talking about, and general corporate execution meet. So the IPO was subscribed by like over 46 times, and it got listed and uh, on April 4 in the NSE small medium emerging index. So IPO was a success, and it has completed close to a little over more than 1 year of listing in the public market. Moving towards a shareholding pattern, it's a promoter-driven company. I do not have access to the other shareholders. The annual report isn't as elaborate as I would like to, but the promoter-driven, the whole 70% stake is majority completely holding by Mr. Sami. The promoter-driven company. Talking about board and directors, so we'll just straight to Mr. Sami's Mr. Sameer age 50, promoter MD of the company. He is a BM from specialized in by Ford Management School in 1996. Other prominent members which need thorough introduction is Mr. Vaishali Jasuja. She's the wife of Mr. Sameer Jasuja. She also serves on the board. Uh, I'll elaborate more on in forensics as well. Overall, I'll leave you to read about them. Overall, very capable people, relatively uh, 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 well-deserved people at the board as well. We'll look through the business highlights, the offerings into P. As I mentioned, I just gave you the glimpse of what they offer the service. So we'll try to whatever I have access to, I'll try to share that as well. So business highlights. So currently, this is FY22 figures. Now they have a presence in 45 cities currently. 1,40,000 projects which they cover, these many units, these many developers which they have collected data points for 14 plus years on a month-on-month basis. So as Gaurav sir was asking, this is the map in which you can see the tier one cities which account for majority of the real estate sector, and the tier two cities which the 30 cities which they are slowly and slowly venturing out on. So this is the whole their pan-India presence. Uh, as I was sharing about this according to the FY22 annual report, in which this was the time in which they mentioned the three verticals differently. Now they club these two verticals uh, together. As I mentioned 60% for the top line for the subscription business, and then the remaining 40. So now they club these two. I do not have the idea why do they do that, but still. So this is FY22 figures. We have access to the ninth month FY23 figures as well, but they do not have the clubbing which I wanted to show. So in FY22, the main core product, which contributes to the close to 60%, very significant part of the ops, growed at a very healthy 16%. And these are the CRM business, which I was talking about, which is the new business, which according to, again, Mr. Chinmay is a very good example of the uh, possibilities which are in the hands of the. So this from a 212 lakhs, it grew to 573 lakhs, which is a very steep increase. And this is exactly what is the application of this data. They're also sitting on an obscene amount of cash, which I'll elaborate on. The opportunities are pretty much. I do not have any forward-looking statement, but it's exciting to what this company can venture into. Moving on to clientele of P. So this is the slide which they have, as I mentioned. So we'll go through each and it will make sense. So P equity firms. So these were the when they ventured into Indian markets, they created the need of GP in the first place when it got incorporated in 2007-8. So they would be the main clientele for the business, the platform, uh, which is the core offering for P. So Brookfield, Blackstone, so as you're aware, these are massive, massive asset management companies. They are very, very heavy on real estate as well. So they need data points. They need that very data to actually get better decision making. These they would actually use the platform, which also has the residential as well as commercial aspect. Now, real estate developers. So, if you recall the second vertical, which was research and consulting. So, let's say I'm a Godrej Properties, and I want to venture into. So, I can move forward and consult A as well to have some sort of an assessment of the feasibility or other kinds. So, all these are clienteles which would use the research and consulting vertical to actually better their decision making, even if they should venture into that XYZ project or not. And banks and other financial institutions, they would actually avail the retail valuation and the the platform, BI platform as well. So if they're lending out to projects, if they're lending out to these dealers, they need to have a good idea of what is happening. They need to have good understanding of what actually is happening on a month-on-month basis. They need access to real-time data to actually change their stance, change their viewpoint. So these are the clientele which are this is again taken from their prospectus. You do not have access to which are existing clientele or which clientele was at what time. That data, unfortunately, I do not have access to. This has been taken from the FY23 uh, 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 9-month FY23 quarterly presentation. This is the after the IPO, what the business has done. So as we mentioned, it raised close to 31 CR from its IPO and sitting on decent amount of cash, and we'll see what exactly they achieved since the IPO, according to their 9-month presentation. So adding new clients, they have added 21 net new clients in the subscription business, which is the core offering. And they added 16 new HFCs and banks in the valuation business, which was the CRM business. So I hope it gives some sort of clarification of what are exactly are the clienteles in which vertical. Lastly, customer retention. They claim that their customer retention stands at 80%. This could you could infer that the amount of value which they are adding. So this is a good sign. Customers are retained. They get some sort of value from B as well. They're increasing their team size. So at the time of IPO, they had close to 200 employees. Now they actually acquired Prop Edge, which is the valuation business, which is the valuation vertical, which they acquired in 2022 as well. So their team has increased to close to 300 employees. A majority of them would do with the hard labor, the groundwork, and they're very capable people in terms of technology at their disposal as well. Also, for a company like Pay, much like consulting or any other firm, the employees will say in their evaluation, their model as well. They are the main asset or thing which majority of the KPIs are measured in terms of employee per employee. Valuation businesses is on the roll, as I elaborated, as I highlighted that is growing at a beautiful rate. It's contributing to the top line as well. The CRM business on an average close to 45 to 80 lakhs per month, which is very significant for the top line. Currently, the top line is close to 32 CR for P, and it is doing very well for a new vertical. Expansion to the valuation business. So as we mentioned, 44 cities would be for their main offering, which is the platform. Now the valuation business is a new vertical, and they are also increasing their presence currently from 15 to now 25 cities for the very same vertical. Currently, the company has no debt, and it never has. So, Mr. Chinmaya called Mr. Samir a very a prudent capital allocator, which I also would agree to some extent, as the company has never taken debt and it always has maintained a very healthy cash position. Given the IPO, given the cash influx, it's stating of 60 crores of cash. Remember, this is a company which is just worth 150 crores. So the deployment of this cash is very, very exciting, very interesting to see what actually happened. And as I mentioned, these data points have been taken from this source. Now we'll actually go through their.
Mike, one question. This Chinmay's comments that you referred to, where has he made these comments? I couldn't find anything on Value Picker. Is there a video or something?
No, so you'll go into. I'll just show.
Yeah, I was also searching the same, so I'm searching his portfolio right now.
Yeah, I think it's in
I'll
his
just
portfolio thread.
so this is the thread on Value Picker.
Yeah, I've read
So
this. This thread I've read. Is he there?
yeah, so if you'll go here, so there's a good thread
Ah,
by
okay.
Hector. So if you'll
Okay,
just
okay.
yeah,
Got it,
Okay.
got it. It's a Twitter thread. Okay, okay.
yeah,
Got it.
so just yeah, you can read through it.
Sure. Thanks, thanks, mate.
Thanks.
So again,
So
I don't know if it's still the right time, Mayank. If you think more data is going to come, you answer it later. But the CRM business, okay, this is targeted towards retail home buyers, right? That's what I understand.
um, so that again, this is for as I mentioned, this would be for the HFC for them to do their due diligence or better due diligence of uh,
Ha.
how effectively they're blending out to is actually that business worth that much or some sort of that idea is for the CRM
Correct.
business.
So,
Yeah.
so basically, see what I'm trying to understand, Mayank, is when a customer comes to an HFC, he has already made up his mind to buy a particular unit in a particular, say, apartment which is coming up, right? So,
Mm-hmm.
the HFC will generally check the solvency of the customer, the ability of the customer to be able to pay, to be able to take that loan, etc., right? So, I'm sure that Prop Equity is not doing any analytics on customers. So it is doing an analytics
Yes.
on probably the
Mm.
property which this
Correct.
customer will be buying, right? So how is the
Mm.
HFC? Do you have any understanding of how is the HFC sort of, uh, you know, using that data की
Mm-hmm.
property की quality of data को कैसे use कर रहा है for improving its lending decisions? Because suppose I am a customer, there's a Godrej property which is getting built. अभी build होने में 5 साल बचे हैं, ठीक है? अभी मान लो 2 फ्लोर बना है, मैं 18th फ्लोर खरीदा हूँ, 5 साल नहीं, मान लो 2 साल बाद बनेगा, ठीक है? तो I
Mm.
have already taken a loan. HFC will look at my financial abilities, and then it will give out the loan, right? So
Mm.
how is prop equities analysis of the Godrej project? How is it getting factored into an HFC's loan decision?
I can probably try to answer this one.
Sure.
Guess. I mean, what could happen? So maybe not for properties which are coming online. I mean, they're new properties, but one very good space where I think this business would do exceedingly good is in the resale property market. So, for example, if I'm planning to buy a house which is say 5 years, 10 years old, there is no benchmark price to that. I mean, nobody is saying this
Correct.
property should be at this price, right?
Correct.
uh, Other than that, there also needs to be a structural check and all of these things. So I was trying to buy a house, right, a second hand house in my society,
Yeah.
and HDFC was supposed to send their engineers to do all this check. I mean, whether the house will stay till 25 years or more, because when the apartment goes near its end of life, or maybe 50% or even 30% end of life, there are cracks and all which is seen, and the this risks would get added to the loan amount, right? Because if
Mm-hmm.
the building doesn't survive, then
Hmm.
yeah. So those are probably areas where prop equity might have a great space for HFCs. And for new property, I'm not fully sure, but these when a property gets built, right, it gets built in stages. So
Yeah.
this loan amount is also released in stages. So when the foundation is done, the bank will
Correct.
release a
Correct.
loan amount, right? When
Hmm.
something is done. So that is also one area where bank can offload a lot of their manual manpower, and kind of use prop equity for all these activities.
Hmm. Okay. Got it.
Possibly.
Yeah. Makes sense.
Yes, so I'll add my
Yeah,
understanding to
man.
it as well. So I think the whole picture is very valid. So if I say, let's say you want to buy, you are interested in a flat, that very same Godrej property, whatever. So if I ask you like what's the value of that flat, or what do you think? So you would need an answer, right? Okay,
Yeah.
okay, 2 months back, this particular flat was sold at 80 lakhs. So you have an idea of plus minus 10%, and this would be the value of this flat. Now, this is a very interesting data point now, the property value. So, according to Mr. Sami, they actually account for, they have access to even the last 3 to 4 data, let's say the last 3 to 4 units which were sold, at what price they were registered, because again, the sector is being formalized. So, you have access to data if you'll try to really grind through it. And that is the whole idea of P. So, they even have access to, okay, this particular project in this Godrej property, this tower, this flat was sold very recently at this XYZ amount. So you would have access to exactly that data, and this is a very real time, very dynamic data as well. So that will actually aid in your decision making to actually decide the amount of
Got it. So
what you want to link. Yeah.
are they providing this data to retail customers like me also, or only to HFCs?
Yeah, so
Like,
that is unclear. So yeah, I think it's just with the HFCs because that is the whole idea that those clientele. So
I
uh,
checked their website. It was not for retail customers, although I would have loved to
mhm.
have it. I mean, I don't know.
hmm,
Maybe if I
Yeah,
invest in
there
this
was.
company, I'll send
Mhm.
out a request to them that please add a.
Yeah, there's an option requested demo. I also tried, but I think they added they wanted so many details. I thought not allowed.
right,
Right.
right.
Now,
Okay,
now
man. Yeah.
my question over here is, see, these business is solely dependent on people buying property, or businesses buying property, or industries buying property, right?
Mhm.
Tier 1, tier 2 city. Now in Karnataka, for example, which is a very rich state, they increased the stamp duty recently to increase their, all this
Mhm. That's true. Mhm. Yeah.
yeah, I mean, electricity and all of these things. So these might
Mhm.
act as dampeners, isn't it? I mean, I'm not fully sure if we are near to any such real estate trigger. However, my other view
Yes.
is, because the Indian stock market is kind of getting heated up now, uh, there could be opportunity that the money starts flowing into such businesses also. And there are many reports which says that the lost jobs which in Europe and America would start coming into India. So if it comes to India, it would go to people like you and me. And then one of the core probably emotion attached to anybody who's from our country is probably get your own house, right? So at
Mhm.
least from a builder point of view, that trigger is there. Of course, it's a long term trigger. And the second is the manufacturing of growth. I mean, right now I think we are in a very sweet spot where we should be able to take some amount of manufacturing in India. So that could be another trigger for businesses. But I can't quantify it whether it would be in 6 months or 1 year or 5 years. But it would come. But when would it come? I don't know.
See,
Yeah. So
yeah,
Yeah.
man, go
sorry.
ahead. After that,
No,
I'll
no.
add my comments. Yeah.
No, so I completely agree. Even in the growth triggers, I also do not have any forward-looking statement. So all that is a very big play in a longer-term horizon in general.
Hmm.
So yeah, I agree completely. Yeah, I
So,
can't comment on.
in my opinion, see, if this is going to be a play on real estate sector going forward, then it's not a very interesting play for me. But if it is going to be a play on improving adoption of analytics for existing
Mhm.
companies, existing properties, because like you said, resale will also happen, right? New projects will come up, new purchases will happen, but at the same time, resale of properties might also happen. So if it is going to be a play not only on new units but also on say resale transactions, then it becomes more interesting, because that means as adoption increases, you are not only dependent on how the real estate market is doing at any point of time. So
Hmm.
this company barely talks about anything. I mean, no sources to
Mhm.
understand this, but I think I would be more interested in knowing this. Otherwise, yeah, the growth will sort of be it will sort of mirror real estate. Obviously, right now their adoption must be very less. So maybe out of say 100 big builders in India, maybe 20 of them are using it and using it at say
Mhm.
25% of the potential that they can use it at, right? So that will
Mhm.
go up. So as that goes up, more and more of the even the new purchase pie will keep coming to P analytics. That is one growth driver. I would love if
Mhm.
there is another secondary growth driver, which is in the secondary sales market, which is not new property.
Now, Nirvan, over here, I have a point. If you look at the secondary sales market, think about when all this flat and apartment sort of culture came out. It's probably started when the tech boom happened, maybe around 2005, 6.
Yeah,
That's,
yeah,
and also, if I look at Bangalore, right, my place, it's in Dodanakundi, so it's far away from the city, from the existing city. It's further. So over here, my society was started at 2006, and
right.
right now people are, I mean, so who had bought it firsthand, they want to kind of get rid of it right now, so that they don't take it say to 30 years or 35 years where they'll not get any money.
Yeah,
Yeah, they'll get the money of the land itself.
right.
And so people will, I mean, I feel there would be a trigger at this sort of range. in maybe 2 3 years down the line, because I've
Yeah.
been seeing a lot of um, ads where people are trying to resell or sell their old apartments, and then there
Hmm.
are people who needs to have a house. They don't want to pay up EMI. They are purchasing it, and for them it's just like till annuity. As long as it stays, they are going to stay in this house.
Right. But they
Yeah.
don't have a product in the space. That's
Nobody has a
interesting.
product in this space, and it's also, this product is not very, what do you call it, it's not trustable, because there's a layer of brokers, there's so many things
Mhm.
over here, and these are all very big purchases. I mean, when a person purchases such a thing, I think if prop equity comes up with some retail solutions, it'll be
That's what.
it just,
So
yeah.
that's exactly what. So I'm surprised they don't have a solution here. But yeah, I mean they can
They're also very
sort of
young.
yeah, they are young. I agree. No, not really, because the guy has
Like,
been doing from what Mayank said for around 10 years, right? The company has been
huh,
around for more
huh,
than 10 years. So I don't know. Maybe they are finding that in India to sell an apartment, ultimately you need a physical broker on the ground to get documentation and everything done. So maybe
hmm,
they feel that the amount of service that they are going to provide, which is probably restricted to a fair valuation, that will not be able to command a high, maybe a commission or something like that.
Mhm.
Let's see. Yeah, man.
let's see, yeah. But I think the valuation at which it is available, I mean, if it is 15 times earnings, I think it's pretty fair,
Yeah,
because I mean, for me, this is an IT company.
yeah. This is an analytics company, but the
Yeah.
problem is there's no growth so far. So I mean,
Hmm.
it's too early, but yeah. So 20% growth is what has happened. Such a low base. It's interesting for sure. But yeah, if it can grow at 30-35%, see, a company like RSCL Geartech is also growing at 30%, right? Its market cap is 1,000 crores. So
Yes.
for a 150 crore market cap company, which claims to be in a blue ocean, right? It's claiming that it's
Huh.
the only company doing
Mm.
this. It has to grow a little
So in the
faster.
yeah,
Yeah,
yeah, in the listed space, yeah.
yeah, yeah. Right.
Please continue. Yes.
Yeah, sure. Yeah. So having this, now we'll look at the exactly services which you'll get. So we have screenshot uh, of those services, those platform at our disposal from their prospectus. So yeah, apologies for the image quality, but this is the idea. So they've selected project type residential for a city in Mumbai, and they have selected these apartment complex, floors, house villas, and they want to see the sales status. They want to see if their construction status, date. You can put the data range and yeah. So for Mumbai, for residential, for the selections, you can have access to. So this is the data which would be at your disposal. Weighted average price, what has been the supply, the absorption rate, how effectively uh, uh, are the projects being absorbed, are being bought into, the availability. So all these, the developers, the projects, and micro markets which are going to. So you can compare with Pan India, you can compare how Mumbai in general is doing, and you would have all these data points at your disposal. So this is the brief, this is the dashboard. Moving forward, you can
So
actually go into and compare
this is
cities.
for the Mike, this is for the subscription service.
Yes, sir.
Okay.
So as I mentioned, this is the residential vertical. So if you'll rate there, so this would also be for commercial as well, in which you'll look for leases and
Right.
sales, lease and yeah, same.
Right.
Yeah. All right. The very same thing can be done for multiple cities. As we mentioned, they have close to 45 cities, coverage in 45 cities as of now. So you can compare pan India supply, absorption, availability, prices, what are currently availing, overhang, which is a very prominent problem in the real estate sector as well. What exactly already are under construction. Uh, so yeah, you can have access to all these data points. So this is the customized dashboard, which would give the user critical parameters, including all these factors which I mentioned, and these all, as we mentioned in the very first slides, that all these trends would aid you in decision making to see what actually the prospectus of a city, or if you're trying to if you're trying to use this data. Location analysis, we can even go into, let's say, yeah. So again, selecting residential, you can actually a city like Vadodara. I can select a micro market, which is a sub-segment, a part of a city, and actually look for those values as well. So I can look at what apartment complexes are, what villas, houses are available, the developers, the units, all that data point. What actually has been the absorption trend, what actually are available, what are the prices, what are yes, sir. So say resale and is excluding resale and including resale. That data point are also available. Um, Lastly, inventory is a very big, as I mentioned, absorption matrix. You can look at what year, what available supply was, how much was it for new launches, and all these data points they have since 2010, and that is a dynamic thing which it's accounted for on a month-on-month basis. So location analysis would provide you critical data points as average execution delays, leading developers, details of new project as well, and a micro market, as I mentioned, inside Vadodara, if you want to look in a particular region, you can also have access to that data. Now, micro markets, as I mentioned, on a smaller scale, if you want to im- uh, look at a so minute detail. So let's say they selected Lodha World One, which would be a project. You can have access to what available units are, what are sold, what's the number of floors. All this very valid data. When it was launched, the completion, they have mentioned delays. The launch price, it was launched at 25,000 per square feet. Now currently is at close to this range, and what is the capital appreciation. Resale price, if they would have access to, they'll upload, uh, they'll update. And you can look for the developer, what exactly that developer is doing. This is very rich data, which you would all have, which P has accumulated over the years. So as I mentioned, if you look into the micro markets. So inside Mumbai, if I want to look into the, you can have chart, you can use data analytics to best. So let's say Andheri, let's say Goregaon, all these the micro markets, you can look for the supply, you can look for the available projects, what the launch value was, their current value is. So all these data points are accounted uh, for very rich data is available. So yeah, ranking of top micro markets also inside Mumbai, which locality is doing well or has the potential to do well. All these data points which you wouldn't have in a normal way, but P has gives you the access to those data. Completion and unit value research gets user the granular data to identify the potential growth looking forward and align with business expansion plan of the company. Lastly, catchment data. I think this was something which Gaurav sir was also mentioning by giving the example of an hospital and the area. So, Mr. Samir in one interview mentioned about how you can actually have a map and actually just click on a data point and have draw a radius or draw a line, and you can actually look 200, 500 meters from that point to actually get an idea what actually apartment, what actually buildings are available. So this is the catchment data. So dropping a pin and drawing the radius, so you can actually access that. Here are the available projects. They would even break them into segment-wise, affordable, mid, luxury, and the data of supply absorption availability, of course, would be available. The very same data for more granular level, the current status, the ready to move under construction, uh, splitting into the apartment block, the type of property, the range, the segment-wise property, the including the excluding resale prices, including resale prices. All that data, as I mentioned, would be available on a quarter-on-quarter basis for this trend, and you can make a sense of these numbers. You can aid into decision making. All these are available at there. So these were all the images which we had access to get an idea what exactly are they offering, what exactly are their services for the dashboard for the that. Right, moving on to forensic analysis. So I do not have access to a major data point. So for example, peer comparison, I do not have a listed company. So all those data points, to be on the safer side, I have scored them a zero. We'll just go through these one by one. Overall, an okay score on piece part. So percent of independent directors, close to 3 out of 8 are the independent directors. Two other the CFO, CS, and of course, as I mentioned, Mr. Sameer's wife is also on the board. Board quality, I have given a no because a couple of, as I mentioned, Mr. Sameer's wife and Mr. Ajay, who is actually a co-founder of a content platform called Array, he's also served at the board. So not, I don't understand the relevance, so a zero on that. Auditor, a company like a company of this size, of course, the auditor wouldn't be well known. That is a very high added cost, so still a zero to be on the safer side. Remuneration. Uh, Remuneration was a pretty low base. This is not a major. It was already very low at close to 2.73 lakhs and increased to 4 lakhs, but still sticking to the parameters I scored a zero. Financial subsidies are audited. As I mentioned, they acquired PropEdge, which is a valuation vertical. Currently, it was not audited, so zero on that. They pay rent. Of course, Nirvana Saras Hotel, so a promoter-driven company. Of course, you would be using the properties which the owner is the promoter. So company does pay rent. It is on a 6.6 lakh annually paid to Mr. Smith. Uh, Remuneration also a zero. It just exceeds it is at 11.37 for the top three directors, which is Mr. Sameer, his wife, and Mrs. Pooja Verma, which heads the investor relation and is the company secretary of it. So it just exceeds 11%. This is in line considering this is a very small company, so you need to incentivize. Usually they are so still a zero. And equity dilution. I do not have access to this data, so but if you look in screen, if you go into corporate action, a lot of corporate events like further allotment, conversion, preferential allotment have been done. So zero on that as well. So that leads to a score of 65%. The rest of the parameters in which they were in line, I have added the Excel file. This is embedded in the PPT. Now the whole idea of forensic analysis is to get the image key. This company is clean. This they are doing things fairly. So there are some points which also need to be mentioned. So if you were eager in investing in P equities IPO, so you must have definitely come across this point, which needs attention since you would be deploying your hard-earned money. So from the DRHP, if you'll go into the uh, other expenses in the annual report, you'll find a very beautiful row, which is net loss on trading of futures and options. So apparently, Mr. Sami dabbles in FNO, which I do not find the relevance for a company like P. So in 2019, he lost 34 lakhs, which again, remember, this is a very small company. And in 2020, they lost close to 4 crores, which if you look for the other expenses, it's nowhere close. It's a very major dent. We'll see in their finances as well. This creates a massive dent. Remember, this is a company which top line is 32 crores. They recently did a milestone of 10 crores and dabbling into FNO, making losses. I don't know. Again, quoting Mr. Chinmaya, he mentioned these 2 pointers are a prudent capital allocator. On the other hand, he also mentioned this factor as well. So in my favorite subject, behavioral finance, there's a thing for cognitive dissonance to hold two very contradictory statements in your mind. And these exactly are two contradictory. On one hand, I'm calling him an efficient or prudent capital allocator. On the other hand, he dabbles into these events and ultimately uh, sabotages the company. Recent trends, there haven't been these net losses. So on a brighter side, you would think that after these, Mr. Sami learned his lesson and did not dabble into. But apparently, these now come into other income. So if you look in the FY22, the profits from this FNO comes into the other income part as well. So this is unrest. This I don't understand the reasoning behind it. It would be very interesting to listen Mr. Samir's view if he would share. So one more thing, if you look into the FY22 annual report, so for these mutual fund investments, this makes sense. Okay, I would prefer that the cash is parked in a bank in a FD, which it is usually, but they have some exposure to these debt funds, so very relatively safe, and they have just quoted the liquid money there. But this individual security is also something to look into. Remember, this is a company which balance sheet currently close to 70 CR. So a very not 70 CR balance. Um, P equity holds ITC worth close to 2 crore rupees. This is very significant, but it also, Mr. Samir, so I believe discussion is also bullish on these other three equities which are part of the oil and gas sector. So these are high dividend paying stock, but still investing in individual securities is never recommended. It's never something to it's a frowned upon thing. And these are significant. They will total close to 3-4 CRs of current investments, which I don't see the rationale behind of the to deploy capital or invest capital in this. So these are some factors to also take into account into decision making. Financial metrics, we'll just quickly go through. I'll repeat these in the valuation
I
as
think,
well.
Meg, we
So
can take this and directly go to, I mean, this slide we can split because you'll cover this in
yeah, yeah,
valuation.
yeah. I'll just mention the ROC and ROA. They
Yeah.
haven't been covered. So yeah. So in FY22, all these term margins will be covered. So FY21, this is pre-IPO. The balance sheet was cleaned, everything. And this step which you see is again the mention of the FNO equity, which was the option if you see this dent as well. And every dent that explanation is the FNO. Recently, why this has been decreasing for FY22, as we are aware, ROE is the denominator is equity. They had cash influx, so their balance sheet became heavier. This is they did the IPO, they raised cash. Um, so this is the decreasing thing for ROC. So the ROC depreciation could be explained, especially this, could be explained by the idea that when the IPO happened, the offer for sale was which Mr. Samir would get, the promoter would get, was a part of the current liabilities. So as we're aware, ROC is no part divided by uh, uh, ROC is no part divided by capital employed. So in capital employed, you would have your assets minus current liabilities. So in the current liabilities, the offer for sale was adjusted into, which now has been removed, which makes the denominator heavy. And this is depression in ROC, which was explained in their annual report as well. So these has been referred. If you look, this is a relatively good 15 plus ROC, ROA doing business, equal to business, which we'll go into detail. Moving forward in growth triggers, this already I have discussed. I do not have access to any forward-looking statement, so I can't comment. I can just comment on the major idea, the greater scheme of things. So there has been a shift towards REs, towards organized players, which would be your developers, which do everything in clean. So according to DOT, in FY22, the 80% of land which was acquired uh, over the land deals, close to 50% was done by these listed players. So a shift towards RE, as I mentioned, the trickle down effects. If you're bullish on RE, if you're bullish on the organization sector, which apparently is happening, is very clear. Case not to gain from in this. The real estate regulatory authority, the RERA Act, which was brought into place to bring some sort of regulations, bring some sort of sound regulation to the real estate sector, which is very critical, uh, very important for the economy and hasn't had the most rosy face. So regulations are important. All these are when the RERA was brought into, the whole idea was that the unlisted, the unorganized player were very unhappy because this will bring in regulations, this will bring in paperwork, clearances, sanctions, all these things. And just to safeguard homeowners and to bring some sort of regulation, this is the shift toward the organized RE, which happens in the. And lastly, as I mentioned, if you say they're new clientele, so Brookfield, according to that picture, they are. And if you've been following the news, a new investment uh, instrument, which is called real estate investment trust, is we currently have 4 listed REITs. So this is your way to actually invest in commercial or residential real estate, which apparently due to its high ticket price, you wouldn't have access to, but you can actually buy it like an ETF, buy like a stock, and actually have exposure to real estate. And these are all something which are part of organized play, which are a part of the shift towards a much more regulated space. More than 5 times. So overall, the growth figures would be, as I mentioned, a longer term play, and nothing short term figures I could come with. Quickly move it, KRS. So KRS, of course, this is your understanding. So KRS, of course, Mr. Samir at the top. So his discretion, as we mentioned, the FNO activities, his pivotal role in creating this company from the ground up. He is the main man at the at the top. So you can have two views. I put it as a team members. You can actually have a continued view. You can say a very capable person of excellence is leading your company. It's up to you, but of course, a team analyst is something which to take into account. Cash deployment, as I mentioned, they are sitting on 60 CR of cash. We'll go through a balance sheet as well. Uh, so there's no clear direction. I have no, I do not have access to any statements to mention how exactly this cash is being deployed. You can make sort of sense that the CRM business, the valuation business is doing well, is growing well. So maybe uh, um, cash would be deployed on those aspects, but still it remains a big mystery of where this passive cash would go to, what actually opportunities they would offer. So in their AGM, just two questions were asked, which actually only one question was answered. And Mr. Samir mentioned that he's open to all options. He's open to acquisition. He's open to or any other corporate action. So again, no clear direction of what how exactly this company is going to move forward. And as I mentioned, it's the only company in the listed space. So you'll have PropStack, you have Leos for us. These companies are already existing, which also deal into a very similar, very vertical, very similar phase area, very similar niche in which P also is positioned. Yeah, so these are the key risks. We'll just quickly go through the evaluation. Yeah. All right. So moving forward with the valuation part of it. So for FI, we this is all the possible financial data we have access to. So FI 19, 2021 data has been taken from the prospectus. FI 22, you have the annual report out. In FI 23, I have the audited financial results out, which I've taken these figures from. There's one disparity in these figures. So in FY 2019, 2020, 19 to 22, these are all the standalone basis because the equity didn't have uh, uh, any subsidiary, any important object subsidiary as a part of it. In FY 23, they acquired Brokerage, which is the part of the valuation business. So these figures are on a consolidated basis. So if uh, I'll be happy to remodel this for a standalone basis. That would give a different image. But there's something which I wanted to mention. All these figures are in lakhs. So just for the ease of understanding, just divide these by 100 to get into crores. So for for a year. So revenue growth, we'll look for the last 3 years. That has been very stable. So they touched a top line of 32 CR in this financial year on a consolidated basis. Revenue growth has been pretty stable, so 14, 30, 25%. The other income aspect, which accounts for close to 10% of the top line. Now, where this comes from? So, as I mentioned, the last 2 years has been coming. A part of it, as I mentioned, they're sitting on 60 crores of cash. So that would be laying in your banks. That would be earning interest. That accounts for the other income. You have the FNO now, which is contributing to other income. Uh, he's also holding investments which give dividends. So all these factors would account for the 10% of other income as well. So the top line has grown substantially 32 crore currently. So as I mentioned, so this company isn't producing anything material or tangible. So costs aren't part of it. The biggest asset, as I mentioned, were the employees, much like a IT firm, much like a consulting firm. The biggest asset employees, and that is the biggest header. So for FI 1920, they were in close to 48%. Recently, they have been in the very tight range of 43% uh, as a percentage of revenue. Finance costs, as I mentioned, this company has been pretty efficient in the way it operates, it deploys cash or takes, it deals with the capital structures. It hasn't had any significant debt, and currently has been debt free for the last 2 years. I'm seeing its balance sheet. It's only uh, plausible that they do not need to take any debt. Depreciation amortization, company doesn't have very critical, very big PP, tangible PP, which would be part of its balance sheet. Its balance sheet is very clear. On the asset side, they have massive cash, and on the liability sides, they have the massive equity. That balances out. That amounts to close to 80% of the balance sheet on both ends. So DNA accounts for 1.5, close to this range, 1%. Other expenses, which account for in the last 3 years, have been accounted for 8 to 12%. This anomaly is the FNO, which I mentioned, which I think below margins. So other expenses, what do they comprise of? So as I mentioned, they're 200 employees, so close to 50, they would be doing the hard labor of going to projects, actually dealing that. So that travel and conveyance, that accounts for close to 33% of these other expenses. Other factors would be maintenance, some similar, some normal other headers. So that accounts for close to 10% of its expense. So talking about the tax rate, so tax rates happen pretty in a very tight range. So last 3 years they have been 25, 23, 25% in a very modest, in a very tight, low variance rate. And they're currently sitting now close to 50 CR of deferred tax assets. So it's only assumable that this shouldn't blow out of proportion. This would be in line with 25% of the. So after all this math, the fat margins for the, especially looking at the last 3 years, considering with this 20 was an anomaly, uh, have been very lucrative, 35, 32% of fat margins for a company like the, it's only uh, expected for a company of being such so lean in the way it manages. EBITDA margins have been 48, 49, 45%. These are very lucrative numbers. These are very uh, um, uh, uh, yeah. So currently, for this calculation, as I mentioned, there would be disparity from Screener. I've taken all these data from their financial uh, statements. So APS in my calculation stands at 10.2. This has been directly taken from their financial results. The P in my calculation would come to close to 50. And these are the other figures um, which EV by EBITDA and market capacity for the numbers which I have access. Now, moving on to projection, this, in my opinion, is a relatively futile attempt to actually model for these things, as there are a lot of variables. I do not know how where this growth is going to come from. I can just take the averages, I can reduce them by some basis point and just give you some cases. But I do not have any. I could explain some of the factors which why I did take them, but nothing major. This is relatively a futile attempt. I just update these figures. So the current prices, I think everything is same. So moving on to these are the assumptions. The current market price taken from Spaino. These outstanding shares have been taken from the NSE website. Expected forward P, that would be up for debate. Currently, this is the median according to Spaino. I've taken this. This would be at your discretion of what you see panning out. Enterprise value,
So,
even though
Mike, just to stop you there. So, just forget about BDMs, etc. The kind of business that T Analytics seems. I know the history is very short, but what would be your gut feeling about a fair value P for a business like this?
so that is the whole idea. I mean, if I were to form an opinion, I mean, as I mentioned, the FNO activity, these are very uh, uh, these are very stamps which are actually very degrade, where they give you a very bad impression for a
Hmm.
company like
But have they
the. But still,
stopped that?
going by the, yes, going by the metrics, of course, this is far from away. I mean, this could be trading at an exorbitant P, and I would still understand. Yeah, this makes sense. Uh,
Right.
but yeah, yeah.
Bank on FNO, have
Hmm.
they stopped it after FY20 or are they still doing it?
Yeah, so as I mentioned, they are still doing it. They haven't learned their lesson, but actually, this is contributing to the top line now. So it's
Okay.
under yeah,
Because
it's under actually
FY22
the
other income you're saying it's under.
yeah,
Okay. Just write option.
yeah. So other income. So
Yeah, I couldn't find it actually. That's why I was wondering.
yeah, sorry. Yeah. So they have accounted for revenue and ops, right? So
Ah,
few
okay.
profits from trading FNO.
What
This is not significant, but still.
they consider options trading as revenue from operations.
Yeah, I don't know. That is
What
the whole
the
idea,
hell?
because in the PNL and the prospectus, they had put the
Oh my
loss
God.
in other expenses. That was not the part of, yeah.
This
So
is
this
so
is right,
weird,
but when
man.
it's income, it's,
Why
yeah,
is an
right.
analytics company saying that profit from trading of futures? Ah, this is a big red
No,
flag.
actually, Nirvan, while I was doing FNO, right, I saw a lot of these small FNO. I mean, they would post in Sensible, right,
Yeah.
their daily profits or losses, and they were many of them were actually backed by these sort of real estate developers or something like that, similar.
Mhm.
So I'll try to find one example and send it to you. So yeah, I don't know why they do it, but they do it.
This is a
And
red.
also another thing is with using FNO, you can actually transfer a lot of black money. So what you could do is instead of doing bank nifty or nifty, if you go into illiquid stocks, right? Uh,
Mhm.
you could encash a lot of black money. Say for example, you trade in a stock where there's no liquidity at all, and you buy a call and somebody buys a put option, which then I mean you can transfer money. I don't know exactly, but there's a way to do it. Uh,
Mhm.
so that could be one way. Yeah.
Yeah.
Yeah,
No, this is a big
the-
red flag, man. Completely
I
agree with you.
I'll try to find that information, how to use how to launder cash using FNO.
See, even if launder cash is not happening, this is just non-core speculative. I mean, why are they taking our money and doing FNO with it? It's very
Uh,
stupid, Gaurav. I mean, I agree now. Now, Mike, I understand your comment about the PE because यार revenue from operations में कैसे दिखा सकते हो यार मतलब this I really don't understand. Okay, got it. You can continue.
Yeah, so all the other, I mean, you can make the sense of these numbers which we have access to. I mean, I wouldn't go into much these projection outcomes. These are all very on a normal basis. Bull bear case all have been taken in a sort of a plus minus 200 basis point. I mean, for a normal case 20, which is on the conservative side for 18% for a bear case, 22% for a decreasing trend. So this is the case which I see panning out. That I've given with all in moderation, which each of the cases. So I'll explain these assumptions behind the normal case, which I've selected.
I think Mike, the your I went through the sheet. Your explanations and your assumptions are very clear. So the case you modeled is with the probabilities, all the three cases. This is the average probabilistic case, or this is one of the
No, sir.
cases.
No, sir. This is my estimate of these
Okay,
cases.
the
But yeah,
normal
this is
case.
model for just
So whatever you modeled is case three, right? Your normal
yeah.
scenario.
Yeah.
Okay,
So I'll just
okay,
explain the assumption very quickly and I'll conclude.
sure.
So other income, for the normal case with the case three, so I've taken a 7% in a decreasing trend. So it could be in a more aggressive decreasing trend. The whole idea is that when cash is being deployed, you wouldn't get the same interest, and this whole thing should decrease. And as you mentioned, there are some other factors like you can know all these other things that be taken on a very conservative 7% of decreasing trend. The top line is 20% decreasing, which uh, yeah, this is all in the air. I do not have anything to back. Employee costs for the last 3 years have been in the very tight range of 42.5 to 43%. I have modeled for a more aggressive employee cost. Why? Because simply as we mentioned uh, uh, in their latest PPT as well, they are employing more people. They'll have more people on the workforce, which will do the means hiring employee would be a good idea to put a cash deployment to actually advance into new territories, new geographies. So advance for a model for a aggressive, relatively aggressive employee. Uh,
This is the only assumption,
expense.
Mayank, that I would challenge. I mean, you could well be right, but I would say that there has to be some operating leverage also in terms of, see, because this company doesn't have any plant, factory, anything, right? So it has um, its operating leverage, its capex is people, right? Just like any IT company.
Mhm,
So don't
mhm,
you think as the company grows, we will see lower percentage of employee cost as percentage of revenue? Because say, for example, you've deployed 10 people in Gurgaon, okay? As the adoption increases in Gurgaon, you may not need to scale, to increase your Gurgaon business by 2x, you may not need to scale your employee strength by 2x.
mhm. Yeah, I
Just
do agree that aspect in existing territories. As I mentioned, the whole idea. I mean, if you read through the highlight as well, they mentioned they're venturing into new newer cities, they'll increase their expansion. So I think they would be hiring relatively more people, and it would take time to get at that
Okay.
level. So the
Hmm.
market reaches the major account. This is the for the platform business, the 52%, and this the CRM which I mentioned, they would actually go and see the prices. They account for 50% of the grant. Yeah, we could do an ABC analysis to see how we wouldn't
Got
have
it.
access to, but
So
yeah, still, I think yeah, they would go aggressive on this. I again don't have
understood.
any forward-looking statements here.
Understood, Mayank. So there is an EPFO link you remember I shared in the group which lets you sort of
Mm-hmm.
check. So
Yeah,
can you
actually,
do that check? Yeah, just do that check and let us know if you are seeing an increase. Like FY23 में FY22 के against कितना percent increase हुआ है? You can probably do that check so that we can model this number better. बाकी I think it's
yeah,
it's pretty robust.
yeah, I'll do this offline. Yeah, I
Yeah.
haven't done that. Yeah, sure. Just quickly going through other FNO, the sorry, the finance charge, as I mentioned, they're sitting on cash. I don't see any reasons for them to take additional debt. DNA that has been modeled for a very similar way in which for exchange for other things. Things are all over the place for depreciation because they have some intangible things on their books, and even PT doesn't account for a massive uh, uh, massive figure on the balance sheet. All these things are very nimble, very lean, so it's not a very high capex or high PPE type of thing. So even depreciation has been modeled for the very same on a very conservative side of 1.3%, which has been sort of in line uh, the historic averages. Other expenses also have been modeled for relatively aggressive. As I mentioned, this would be the effect, the very same logic that hiring more employees that would add to this uh, 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 other expenses, travel, conveyance, all these factors would increase and higher uh, share would be deflected. The tax rate should be in line because, as I mentioned, they have some sort of tax uh, net tax credits, so deferred tax, and it has been pretty uh, uh, small range. So for these assumption, it comes out to be close to it has been a 35K business, unless for except for this FY23, a model for a very similar PAT margin. On a EBITDA basis, the number which was close to touching 50%, this FY 23 it was down to 45%. Our model on again a conservative, relatively very these are very still very high numbers of 44, 43 on a decreasing trend. And these decreasing trend are the factors of these two assumptions which we took. The increase in the so 32, yeah, this is the normal case. For a bull case, you would have much more in line with what has happened. For a bear case, it would be um, uh, much more different. For these assumptions, so might be for, say, your forward P would come to close to 9.9, and that would lead to, say, a upside of 65% for the normal case, resulting in a 18% case. I would be happy to, this is again model for 16.4. Again, this number is up to your discretion, whatever you want, whatever case you want. So I'll leave you to be the judge of that. But yeah, I think these numbers stand much more important, understanding what this business is and setting expectations. Yeah, I'll conclude my findings for PAs. Thank you.
Thanks, Mayank. Lovely presentation. I think very limited information available for this company, but whatever is available, I think you've captured it nicely. Thank you.
Thank
Yeah,
you.
great presentation. Cool. Right
Yeah.
then, I think then we can close.
Yeah, we'll close. Just a final comment from my side that I think this company is one of those companies that you set up and take notice of because they're talking about tech. They have a partnership with Berkshire. So I think Berkshire tied up with them for the same thing that
Mm.
Blackstone has tied up with them for. So for data analytics. So that plus you can see that there is need for this database underwriting, everything is data's importance is increasing. So obviously it's natural that real estate data will also gain more prominence. All these things are positives. But right now I think there's too little information. So somebody who has met management, for example somebody like Chinmay, will
Mm.
probably have some differential insights on the runway of growth, plus on a sense of how the promoter actually seemed like to the person. Uh, I mean, otherwise, see, last year, zero cash deployment. Yeah, 60 crores remains 60 crores.
Mhm.
Revenue growth is nothing amazing. So, like, the business is not telling us anything